Hey guys, Jason Sharon here from Home Loans Inc., teaching you how to calculate rental income for a VA mortgage application. A little bit about me. I was in the Navy for 20 years, enlisted for 9, and commissioned as an officer for 11 years. I got my first initial loan officer license in March of 2015, opened up my own company in March of 2018. I'm licensed in West Virginia, North Carolina, South Carolina, Georgia, Florida, Alabama. And a little fun fact about me is I'm a certified barbecue judge. Production accomplishments, I'm 65% VA loans on average. I average about 30 units a month. I've written and published 3 mortgage books: VA Mortgage Declassified, I Hate Renting, and Mortgages for Realtors. And I've been interviewed by several national mortgage magazines, including Money.com, Housing Wire, and National Mortgage Professionals of America. Rental income guidelines. So we're going to talk about 2 different scenarios here. What first is departing your primary residence. So let's say you live at 123 Main Street and you're going to buy 456 Elm Street, and you don't want to sell your primary residence. You want to convert that into a rental. So you're moving from a rental from your primary to a new primary and converting this to a rental. That's the scenario I'm talking about here. If you do that, that's perfectly fine. We do it all the time. What you need to do is get a signed lease for that property that you're departing from, and you could use that lease amount, that dollar amount, to offset the mortgage on that property. So let's say you have a mortgage payment and it's $1,000 a month, and then you're going to rent that home for $1,200 a month. Wonderful. How the underwriter is going to calculate that is the underwriter is going to take that $1,200 a month, use $1,000 of it to offset the $1,000 mortgage payment. So that'll be basically wiped from your debt to income ratio calculation. That other $200 a month is just not utilized. You will need a copy of that lease and make sure that lease is not signed by someone with your same last name as the renter. Let's talk about existing rental property. So this is a little bit more complex. To use rental property income from existing rentals, you need to show your Schedule E from the last 2 years from your 1040 tax returns. The underwriter will calculate your profit or your loss and add that to your debt to income ratio. Depreciation, as you know, is not a real cost or real loss, so that can get added back to your income calculation. So let's look at the Schedule E, and then let's do an actual example. So here's some 2019 returns from an actual real life scenario. So here they had a depreciation of $6,600, and they wrote off a loss of $21,367. So there's a pretty big loss for this. Effectively, it's probably about $15,000 because of the depreciation, and we'll go through and show that calculation here in a moment. So same person, 2020, same depreciation, 6,600, and only had a loss of 1961 for the year. So that's going to show a positive. So now let's take those 4 numbers and do a calculation with it. So this is the form that the underwriter will use, and if you want a copy of it, just contact me. I'll shoot you the Excel spreadsheet. You put in the 2 years, you put in what the loss was, and it tells you, line 21 from the Schedule E. Then you put in the depreciation from the Schedule E, and that's going to show you what your actual loss was for the year. And then for the 2020, it's going to do the same thing, and then it's going to average that. So for this person, we're going to have $421.92 as a liability, or is that the net rent loss for that property owned, which isn't great, but it's significantly better than holding the entire mortgage payment for that existing home against them in their debt to income ratio. That could mean the difference between approval and decline. So to wrap it up, I'm licensed in West Virginia, North Carolina, South Carolina, Georgia, Alabama, and Florida. My contact information here, 843-LOW-RATE, jason@homeloansinc.com. And please like and subscribe, because if you found this useful, someone else is going to find it useful, and YouTube algorithm is going to show it to more people the more times you like and subscribe. I appreciate y'all. Have a great day. Bye.